Alrighty, well, good afternoon and welcome everybody. Thank you for joining us today for a presentation on cryptocurrencies. Our presenter today is Arlene Ferris-Wax. She's the Director of Complaints and Investor Outreach at the New Jersey Bureau of Securities and has been employed with the New Jersey Office of the Attorney General Bureau of Securities for more than 15 years. Prior to supervising the investor education outreach and complaints units, Arlene supervised the Bureau's examinations unit. In 2015, she received the New Jersey Attorney General's Award for Excellence in Public Outreach. She has been employed with both the New York Stock Exchange and the American Stock Exchange, worked as a senior compliance officer at a broker-dealer, and as an investment advisor and registered representative. She holds a BA cum laude from SUNY at Buffalo and a master's degree from SUNY Queens College. So thank you so much, Arlene, for speaking with our patrons today. Before we jump into the presentation, I just have a few housekeeping items to go over. First and foremost, we will be taking your questions at the end of Arlene's presentation, but please feel free to submit them at any time using the Q&A or the chat buttons in Zoom. Arlene has provided me with some handouts and flyers that she thinks might be of use to you. So once we get underway, I will upload them to the chat and you can download them from there. There will be a survey at the end of the webinar, so if you have time, yes, please complete the survey. We always love hearing your feedback. And if you want more information on cryptocurrencies, the New Jersey Consumer Affairs has a page dedicated to it at the web address on the screen. Again, I will put that in the chat so you have a live link to it, and you can check that out at your leisure. Before we jump in, I just want to go over the Zoom dashboard just to make sure that everybody understands. This is what your dashboard should look like if you're using a PC or a Mac. If you're using a mobile device, the dashboard may look a little bit different, but all of the features will still be there. In the bottom left-hand corner, you will see audio settings. This is where you can check to see if you're connecting with an earbuds or headset to make sure that everything is connected properly. At any point during the presentation, if you have any problems, there is a raise hand button here in the middle. You can click on that. That'll alert me, and I will send you a message in Zoom and hopefully be able to resolve any problems that you are having. And as I mentioned, if you do have any questions, please feel free to submit them using the Q&A or the chat button, and we will address them at the end of Arlene's presentation. So that is everything that I have for you. So now it's my pleasure to turn it over to Arlene.
Oh. Thank you, Andrew. And thank you to everybody that's on this Zoom presentation today. I really look forward to talking to you about cryptocurrency. I'm going to share my screen. 1 second here. I don't know. I thought we had this up. I thought I had my PowerPoint up, so just give me a second here. Okay. Okay, everybody. I think that should start. Let me just say at the beginning of this that I'm going to try to provide some overall basic information about cryptocurrency. It's a relatively new asset class that's unregulated. And I walk a line between providing information where I'm cautioning possibly about people interested in investing, and really talking about some of the potentialities of this new asset class. So with that in mind, I'm going to continue. Oh, and I should mention, I hope to be able to answer any of the questions that do come up. If I'm unable to, I will be providing my email address, phone number, as well as the Bureau's contact information to follow up with anyone that needs additional information or has a question that I have to find out about after this program. see here. As Andrew mentioned, I'm with the New Jersey Bureau of Securities, and the Bureau of Securities is the state securities regulator. There's a state securities regulator in every state in the United States. And basically, the agency is really tasked with the responsibility of investor protection and compliance with the securities law and regulations. And under those auspices today, in terms of investor protection, I'm trying to speak with you today about cryptocurrency. The Bureau also regulates securities, firms, brokers, and advisors that do securities business coming in and out of the state. So let's get to it. So what is cryptocurrency? Well, cryptocurrency is digital currency. It's decentralized money, decentralized digital money. It can be used online to buy goods and services. Consumers can access the money pretty quickly, somewhat cheaply. And the transactions use an online ledger. It's really considered an online finance ecosystem. There's no fees. And really, it's looking to work within the community of users. And it uses strong cryptography to secure transactions. And what I'm saying here is I'm always reminded every time I speak with someone and they're using their debit card, their Venmo account, their Zelle account, that there is an aspect of a really kind of a cashless society. So it's another form of money. Digital, but still another form of money. And cryptocurrency can be used to buy goods and services. It's not managed or governed by any central authority. So therefore, there's no government or middlemen managing cryptocurrency. And like other assets, it can be invested in, like stocks or precious metals. However, with those investments, stocks or precious metals, they are regulated, unlike cryptocurrency. And we'll talk a little bit more about that as I continue the program. Now, cryptocurrency is the opposite of fiat currency, which is really government-issued legal currency. So we're talking about, for an example, US dollars, the Mexican peso, government-issued and backed money. And you may have heard about various digital currency. And just to mention some examples, Bitcoin is probably one of the most well-known, Polkadot, Stellar. You know, there's a lot of them that are out there. I mean, probably at least more than 50. And so you will hear about a lot of these different types of cryptocurrencies and their pricing and information about them. Non-fungible tokens, or NFTs as they're known, are really digital files. Real-world objects are digitally encoded, generally art, music, and these NFTs come with rights when they're purchased. Some permit people to reproduce them, others don't. So, you know, they're a little bit more complex in terms of reproduction rights in that regard. But there have been a lot of, say, celebrities and others, you know, that have ventured into the NFT world. You might have heard about Donald Trump doing some NFTs, some other, you know, people in Hollywood that have been interested in producing some of their music through and selling it as an NFT. And there are some markets for this. Bitcoin is probably the most well-known cryptocurrency. There have there are approximately 21 million Bitcoin that have been issued. They were created in 2009 by a gentleman by the name of Nakamoto, who continues to remain anonymous. And really, Bitcoin has been, it was the first cryptocurrency and probably the most widely used and accepted. And really what happened is this was a reaction to the financial crisis of 2008. And there had been a lot of papers by professors discussing cryptocurrency. And you might see on this page the Bitcoin symbol, and you may see that throughout wherever Bitcoin is sold. Stable coins are another type of cryptocurrency. However, unlike various cryptocurrencies which just trade within a market, these coins are pegged to real currency like the US dollar and are therefore less volatile or changing in price. So that's something to keep in mind. The blockchain is a database, and it's really used in cryptocurrency to hold records to ensure security, transparency, and decentralization. So different types of information can be stored on a blockchain, but the most common use so far has been as a ledger for transactions. So data is connected from block to block in chronological order. What also needs to be said about blockchain is that it is has been a new technology, that it holds other possibilities other than being used by a ledger. So it is only one component right now being used in cryptocurrency, but it doesn't mean that for the future, other uses will, be looked at and be applied to using blockchain technology. So again, another component of the cryptocurrency world to show that, we have to be careful in looking at an unregulated digital asset class like cryptocurrency, but also the possibilities within something like a blockchain technology. Mining. I think a lot of us have heard about mining. I found it quite confusing myself. And really, this is a computerized form of working to verify and authenticate blockchain records. It requires high-powered computers really to solve complex mathematical equations. Generally, cryptocurrency mining goes on around the world. So there's not just one spot where that can happen. And these very, very fast, high intensified computers can authenticate cryptocurrency records. I spoke to one miner because I was curious as to, well, how long does something like this take? And the miner was explaining to me that it can take maybe up to 10 minutes, to verify transactions. So it just kind of gives you an idea, but of course, it's on a much larger scale. When miners mine and verify transactions through cryptocurrency mining, they receive coins or tokens for the work. And it's a very decentralized, mathematically intensive process. So, it's the reason to be concerned about cryptocurrency mining is that, of course, it's a component to verify transactions, but vast amounts of energy are used because of the fact that transactions are not recorded in a central database. So there's a lot of energy used to power digital currency mining and trading operations, burning fossil fuels as well as renewable energy sources. At this point, it's hard to totally quantify the impact that cryptocurrencies have had on climate change. The New York Times has had some recent articles about large cryptocurrency mining establishments that have been established, say, in the Adirondacks, and look, for example, and looking at the impact on the environment there. There are some forms of cryptocurrency, though, that do not require mining and use less energy than Bitcoin. So this is something that has to be studied further if indeed cryptocurrency becomes even more popular and used as a means of exchange for goods and services. Well, you need a cryptocurrency wallet. What does that mean? Well, wallets are a proof of your digital cash. They allow investors to really receive and send cryptocurrency or tokens, as they're also known, to a special digital address. You can have a cold wallet, which is a type of hardware wallet, or a hot wallet, which is a software wallet. And basically, wallets that are not connected to the internet are more secure. But many people choose to use hot wallets because they're more aware of the software internet sites that they can access. Digital coins, however, one thing to mention, are considered property, and they are subject to capital gains taxes. So I thought that was kind of interesting that right now they can be taxed, even though we're still looking at how we regulate this asset class. Keys. Well, keys are randomly generated numbers and letters. There's a public key where you can use only to receive cryptocurrency from others. And private keys really used to provide access to a user's cryptocurrency. This is sort of akin to, a very information that should be kept confidential and shouldn't be shared with anybody or any entity until you're very confident about the entity or person that you're sharing that information with. And there's something known as a digital signature. This is used to sign and authorize cryptocurrency transactions. Often you'll see these digital signatures on the non-fungible, the NFTs that I discussed earlier. I just want to say a few words before I go into how to buy cryptocurrency, because the Bureau regularly receives complaints from investors that have been scammed on cryptocurrency sites. And I just want to caution people that before they look at how to invest in this asset class, that they carefully look at the exchange or platform they're looking at, to make sure there's two-factor authentication and ID verification for security purposes, and looking at the fees that are charged. And questions about any site, you can call the Bureau of Securities and we can let you know if there have been a lot of complaints or other problems with that site before you invest. And then you'd have to fill out an account. Mostly they're collecting information, your name, your address, picture of your driver's license, etc., to know presumably who they're doing business with. And really to decide how much to invest and, of course, to make your purchase. Bitcoin, I think as of today, when I looked at the price, was a little bit at the website I looked at, was just at about $30,879 a Bitcoin. However, you don't have to buy a single Bitcoin and invest $30,000. You can buy a component of it. So, that's another thing to be aware of as you're looking at assets to invest in and how much you want to invest. And the reason I stress that is that with something that's very speculative, like cryptocurrency, where you have really the possibility of losing 100% of your investment, you may be wanting to be very careful about initially how much money you put into any of the digital assets you're interested in. Well, this is where we get into concerns regarding cryptocurrency. I've mentioned that it's really not regulated. So the New Jersey Bureau of Securities regulates securities. Cryptocurrency right now is unregulated. It hasn't been deemed a security, although the Bureau of Securities does look at complaints and take action to try to get websites off the internet when people have been scammed. But it has a lack of centralized control. There's a lot of anonymity between buyers and sellers. It's uninsured, so people are very vulnerable if they were to lose their investment. It's unlike going back to your credit card company and saying, you know, I've had a problem with this transaction. I want to open up an investigation. You know, hackers use it as a payment. There are a lot of cryptocurrency scams that I will go into very shortly. There are fake Bitcoin exchanges, and people have had circumstances where their cryptocurrency wallets have been hacked. And that is why I stress today that people be very careful about sharing their private key information and who they speak to about investing in cryptocurrency. We frequently get complaints that have originated from investors that spoke to people on social media. And a lot of people become interested in doing investing, discussing it, and are talked into investing and talked into certain sites or share their information, and their wallet is taken with their money and they can't get it back. So it's something, you know, to be aware of, that unlike other types of securities, the investor is a lot more vulnerable because there's far fewer protections. It really is a situation where the buyer has to beware. That's not to say that there may be more regulation coming, but at this point in time, you know, it's still really a big discussion that's going on amongst regulators. And I think they're gaining further discussion to see how they can work with various exchanges that are, you know, working in the cryptocurrency world, and ways to stop some of the problems that can occur and hurt investors. As I mentioned, there are fake digital wallets. And really what I wanted to mention right now is what we're seeing at the Bureau of Securities are scams called romance scams and pig butchering. And I specifically mention those because romance scams have been generally across all age groups. Initially, I thought it would only be amongst maybe people, young people, but more and more people are using dating sites or on social media sites, become interested quickly in someone. The talk immediately or quickly turns from romance to investing, and that person that's the scammer talks them off the site to another link where they begin investing, and they see that their money is profitable. And then when they desire to pull out the profits, they're told they have to pay high taxes. And if they don't, their account will be closed and their money lost to them. So we're seeing a lot of those types of romance scams. I warn people about checking out who they're speaking with. You can check on the internet to see if that person is speaking to other people with the same language. You can take a look and check on those sites by calling the Bureau of Securities, because you need to be very, very careful in the social media world where you begin to speak to someone. They don't want to meet you. They'll never want to meet in person and talk to you. So be very aware if your new romance starts to talk about needing money and you become involved in investing with them. Pig butchering is another piece of these romance scams. Sometimes they just are very intense friendships, or they do become a romance scam where over time, they usually take more time, and the individual is sort of set up as a target, like a pig to the slaughter, which is where this pig butchering term of art comes from. And over time, the person is set up to become very interested in investing. They start to feel very comfortable. They start to invest a lot of money. I mean, we've had people lose millions of dollars and submit complaints. And then when they're ready to take profits and get their money from their investing, again, the account is closed, the person starts to ghost them, and they can no longer access their account. So again, the thing about cryptocurrency, like any type of speculative investment, is you have to be prepared to lose your entire investment. There's a lot of volatility in terms of changing of prices per any particular cryptocurrency at any point in time. Unlike stocks or bonds where you can look up a particular price of what it might have traded at by the end of the day and get a price, and I could look it up or you could look it up, and if we both hold IBM at a certain point, we'd find out what that price was by the end of the day. With cryptocurrency, pricing varies because prices are really provided over a variety of websites. So depending on what website you view, you can see a different price for any of the digital assets you own. I just would like to mention a few that I find that are helpful and provide information on cryptocurrency pricing. That they include coinmarketcap.com, prices.org, cryptocompare.com, and bitinfocharts.com. Perhaps later I can share that information with Andrew, and if anybody wants to have that listing in writing, I'd be able to provide that. But that is something to be aware of. Additionally, just to know a little bit about fee information related to cryptocurrency. Most cryptocurrency exchanges really charge between 0.1% to 1% or more per trade. And I really got that from gobankingrates.com. However, fees can vary. And some brokerage firms don't charge fees on transactions, but they sell data to high-speed trading firms. So review websites and check with various websites of what the charges would be. So again, it can be hard to verify independently coin value, and that's why I provided those websites where you can check the value of any kind of coin that you've invested with. I also want to talk about multi-level marketing platforms where a scheme tries to pull one person in and then another. And a lot of times, again, these types of scams go through a group, sometimes what's called an affinity fraud, people that are involved with common interests, and a person in the group starts to defraud people and get them interested in investing in cryptocurrency. They're a fraudster and provide types of links where the money will go to them and the investor will be scammed. Pumps and dumps is really, it's a type of scam common in the securities world, but also common to cryptocurrency. Often people that are holding coins start to talk up the coin so that the value increases. People start to buy it, and then others that have the coins sell out, and people that have just initially bought it are left holding the bag because really the information that's provided has not been true. So it's something to take a look at. You really should do your homework when looking at purchasing any type of cryptocurrency. I have provided, and I think Andrew said it'll be included in the chat, information about romance scams and also our handouts about cryptocurrency investor alerts. Well, I guess this would come to a point where I could take any questions, Andrew, if there's any that have come forth.
All right, thank you, Arlene. If anybody does have questions, please feel free to submit them using either the Q&A or the chat feature, and we'll be happy to address them. I guess we can start out with kind of what's the buzz at the Bureau of Securities related to crypto at this time?
Well, I think in terms of the buzz, I mean, we're always concerned because we get so many complaints in terms of talking to people and making people aware that this is a very that this is an unregulated investment, and as such it's very speculative. There's no place, there's not a way to just easily get their money back. So the buzz has really been, well, are we going to see more regulation? I think we will. That we've talked about that, but I think the regulatory bodies are really working out, not only are these securities, what do they look like? How do they perform? Securities in and of themselves are defined by a Supreme Court decision called the Howey decision, which lays out the components of what does a security look like. Because, for example, it's easy to see that we know certain things are securities, stocks, options, bonds, but oftentimes the Bureau of Securities gets provided with information and we're not sure, or we have to look at it further legally to see if we have a security or if this is another type of matter that might have to be referred out to another regulatory or regulator to take a look at, for example. So I guess you could say that, the buzz is to really let people know, that these pig butchering scams, as much as they sound really horrible to talk about, are going on. People are losing a great deal of money, and we really want investors, to pay attention and be careful.
Is there a limited amount of cryptocurrency?
Yes, there is. With Bitcoin, there were 21 million Bitcoin released. And as soon as those 21 are fully released, they'll just fully trade, but there's not supposed to be any more that are, put into to trading. So it will be those trades, that go on. And basically, the idea is that crypto mining for Bitcoin would stop. So, that's something to be considered of how it's worked and when that would happen. There's a period of time that those persons that had designed Bitcoin were looking at for that future point in time. Right now, it hasn't been reached yet.
There are follow-ups. How much Bitcoin has already been mined? Do you know?
I don't know off the top of my head, to be very honest with you. I just know that right now, it's the world of 21 million. So I can't speak to that exactly. As I said, it's decentralized. You've had a lot of mining around the world. Certain countries had become, very much involved in cryptocurrency mining. But again, it has various complexities attached to it because of some environmental concerns, which again, I've had to discuss as really being at this point in time could be problematic, but it hasn't quite been quantified. And, given the electrical demands, etc., some areas in the world have had problems where this very intensive computing is going on, and that powers on, the problems on those grids.
Somebody asked, can you explain the blockchain again? I still don't get it.
The blockchain is really a database. So it's really an alignment of transactions in chronological order that get verified through mining. And therefore, it's like a giant digital ledger right now of buyers and sellers. Okay. And through mining, those transactions are verified. So easily, I'm selling to you 2 Bitcoin and that can be verified. And those blocks of information are put together on this database digitally through this blockchain technology. But again, as I've mentioned, blockchain technology and the ledger that's being used for cryptocurrency is only one type of use of blockchain. And therefore, there may come other industry uses, maybe putting on mortgage loans, titles. There may be other types of uses that can work on this type of digital technology. So I wanted to just present that idea so that people are aware that there may be even pieces that are taken away from the cryptocurrency world and have further possibilities. Does that help? Because I think we all know what a ledger is in terms of showing like buyers and sellers. But in this case, it's really being appearing within a computerized digital format.
I don't see any more questions.
Oh,
So,
I hope I haven't confused too many people.
is there anything you would like to end with, Arlene?
Well, this is our information here, the Bureau of Securities. I've provided my phone number. This is my work cell number here, and the phone number for the Bureau of Securities. And the Bureau's website, you'll find various pieces of investor education on the website related to cryptocurrency or any aspects of investing, and my email address. I also can provide a bibliography that upon request, if anybody is interested, in looking into this matter and looking at some articles related to cryptocurrency.
Alrighty, well, thank you so much, Arlene, for presenting on a very convoluted and sometimes confusing topic. We appreciate it. And thank you everybody for attending today. Everybody, I just want to say be safe, be well, and hopefully we'll see you soon.
Thank you.